the government's going to have to free up some money so that the economy can be regenerated. So I can see some debts just being forgotten. The rest of it is they can, redesign our currency, build it based on silver and gold, and then do a conversion as to the debt and put it back in your lap, or they can just write it off so they can get the economy going. Either way, bond holders are going to they're either going to pay off the debt, they're going to restructure the debt, or they're going to default on it.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, we got consumer confidence numbers out. They're looking so good. What is anybody worrying about a recession for? And with the Federal Reserve deciding whether to go or stay or go, it makes a difference. Russell Stone is with us now. Russell, great to have you back on the show. So what is your take on all these numbers we're getting?
As we were talking before the show started, Kerry, the consumer confidence index is, if I had to label it, I would call it a hiccup. The market was trending up from January to March, April, kind of a sideways up, the market, the Dow, the S&P, the NASDAQ. A lot of the metrics were not going down, but they weren't going up either. This is more of the same. Some of the things that are coming out now, the car market, the used car market prices are down 10%. Real estate prices are starting to crack and go down. Unemployment is starting to go up. You're seeing a lot of large check, and the unemployment is unique because the layoffs are coming from the top down, not from the bottom up. So as these things start to entrench into the markets more and more, you're going to start to see the confidence plummet and head back down to where it was going. This confidence index really went sideways. It really didn't go up. When something goes up 0.2%, I don't count that as any big change in the consumer price index or the consumer confidence index.
Right. So we shouldn't be easily swayed by the numbers here, should we?
You're going to have to show me a lot more good going on within the economy, all levels and throughout the world, because we got China is starting to really show itself as the weakness in China's debt markets start to implode, and those are going to come across and hurt our pensions and hurt our other investments over here with the private equity and the hedge funds. So there's a ripple effect, and we're going to see a lot of ripple effects because the world is built on debt, not on value.
Okay, so we have a debt-based economy, we have a debt-based currency, we have a debt-based world.
Correct. And at the same time, throw in the fact that the world is deleveraging against the dollar. So as Saudi Arabia and OPEC start to pull away from the dollar and allow other currencies to purchase oil, what's that impact going to be?
Right.
Now, we know what it's going to be. It's not going to be good. All right. It's going to cause inflation and other problems.
Mm-hmm. Okay. So where does this leave us here as investors, as somebody who would one day like to maybe retire?
Yep.
If the stars align for me to do that?
If the good news is that we are going to survive this, but it's going to come at a cost of a big adjustment in the way we go about running our businesses. One, I would put a strong emphasis that everybody should have precious metals, gold, silver, as the basis of their portfolios. 5 or 10% of their net worth should be in precious metals, physically owned, held in your hand, right? And then you build up from there. You can use money market accounts that only buy T-bills for liquidity. Don't use a bank. Try and get your money out of the banking system. The banks are in trouble, all right? You can't keep on taking money out of banks and not putting money back in and expect them to survive. So you need to leave as little money as possible in the banks and put as much money in the government-backed money market accounts that allow us to, sorry, we just had a camera failure here.
That's okay. You're still on.
So at the end of the day, we have to deal with that. So as we go about fixing those problems in the banking system, and they will get fixed, but we have to go through deflation first. All right, we are going to go through a deflationary cycle. It's already underway. There's no stopping it. The government's not going to be able to stop it. The consumer needs to have the real value of the stock market go down to what it really is. You can't print $10 trillion, inflate the value of the stock market, distort the price of bonds, and expect it to go away in 6 months.
Okay.
Not going to.
Did you explain that to our politicians, please?
I've tried. It doesn't work. I've been into some like luncheons and charity things where politicians show up and you engage them in conversations. Do you think that they know what they're saying? And they say things like this: "Oh, the U.S. government, we're the borrower and the lender. We have a great deal. Nobody can top that." Are you kidding me? When the politicians making the policies think that we can just borrow and lend from ourselves and that's good, we should be really electing different people. Sometimes things have to break, Kerry, before they get better.
Mm-hmm. All right. So you're a bundle of joy today here, Russell. All right. So how bad is this going to be, though, this recession?
1929, probably times 2.
So back then, the populace was much more compliant. They believed in their politicians, in their government, in your government. Now it's not like that. When people start starving, they take to the streets, don't they?
Yes, they do. Yes, they do. But keep in mind, what's the biggest difference between 29 and now, which is why it's going to be a degree or 2 higher than it was in 29, is the currency was backed by gold in 29. Now it's not.
It's not. It's backed by the full faith and confidence of the U.S. government, right?
If you had to put that in terms of a ship, it would be the Titanic. We have $32 trillion of debt, $1 trillion of interest on that debt, and $184 trillion of unfunded liabilities that there's no possible way they can pay.
Yeah, so the day of reckoning is coming for the U.S., and this is the Western world. This is China. Maybe Russia's the only one with no debt, but the day of reckoning is here, isn't it?
Yeah, they finally kicked the can down the road and hit the cliff.
Yeah, and it'd be good if they followed them up. I was thinking we should just replace all our politicians with AI because they couldn't do any worse than our guys are doing.
Quite honestly, here's my new standard, Kerry. All right, we should change the standards in which we elect people by. Nobody with greater than a high school education should be elected to public office.
Yeah. Well, that would be a switch, wouldn't it?
Right, because quite honestly, you think we're in this mess because we elected a lot of smart people with degrees. Where's it gotten us? And stop putting lawyers in Congress and the Senate.
You think, huh? Is that going to help?
Sorry, I hate to be brutal like that, but I'm sick and tired of seeing my family line up at the end of the line in America, the land of opportunity, only to tell them that they don't deserve anything. We're the last one in line all the time.
Yeah. All right. So obviously things are going to get bad here.
Yeah. Preparation is everything. We can survive this. We will. We've gone through worse. Civil War was pretty bad. 1929 was bad. World War II was pretty bad. All right. We'll get through this. It'll break. It'll get better. And we'll fire a bunch of politicians. We'll get rid of a lot of bad policy. And we'll go back to good old fashioned, keep it simple. We don't need a Department of Education. We don't need all these bureaucracies that just bloat the budget and become funding mechanisms for the party in power.
Yeah, well, slush funds, everything else, all completely corrupted. We know this, but still, really difficult to deal with this, isn't it?
Yes, it is. It is. It's going to be a test of our mettle, Kerry. All right. We were fat, dumb, and happy. We sat on our hands while we allowed the politicians to get away with this stuff, and we went along with it. All right. Now we're waking up. Thank God America is waking up. I travel a lot and to meet people and to go to conferences, and America is waking up. There is a lot of good news, and we are going to come out better than we were, but we have to break first, and we're going through that process now.
All right. So, again, what are your suggestions here? What do we do?
One, pull out all unnecessary money out of the market and put it on the sidelines for the time being. Buy low, sell high. Build the base of your money with silver, not gold, because you can buy 83 ounces of silver for every 1 ounce of gold. If you wait until the ratio goes back to 10 or 12 to 1, right now it's 83 to 1, you'll be able to sell off half of your silver and buy 2.5 times as much gold. So
I like that.
Silver, have it in your possession, and then understand that that's the basis to protect yourself against a failing currency. All right. And from there, you just keep it safe. Keep it liquid, pay off debt.
Yeah, what's going to happen to your debts once the currency collapses?
Well, I think the student loan debt is going to have to just be written off. I don't see the kids being able to pay off these student loans. All right. So if the contraction is big enough, the government's going to have to free up some money so that the economy can be regenerated. So I can see some debts just being forgotten. The rest of it is they can, redesign our currency, build it based on silver and gold, and then do a conversion as to the debt and put it back in your lap. Or they can just write it off so they can get the economy going. Either way, bond holders are going to get, they're either going to pay off the debt, they're going to restructure the debt, or they're going to default on one of those three things.
All right. So we're going to get shafted, huh?
Yeah. But think about it, the bond holders did get shafted, right? Think about when they bailed out GM. Think about when they bailed out SVB Bank. The bondholders got shafted, all right?
This is true, but and the shareholders. So both of them get shafted and...
Didn't get shafted, Kerry. JP Morgan.
Yeah, well, I would never expect that, would you?
They got a great deal. They 80% of the assets at a discount price, and we got to hold the bad assets and pay for them.
Right. Hey, so what's quickly CPI numbers? They seem to be heading down. Is that just a brief hiatus and we'll see them go back up again? What's your take, Russell?
It's down. We're in the outer fringes of a deflationary cycle. We're going to see prices going down because demand will go down, therefore forcing the prices to go down because they're going to want to liquidate inventory. And you're going to see a deflationary spiral take over, which is good news for us. It's bad news for the government. Cash will be king. Why? Because your dollars in nominal values will buy a lot more than they would when the prices are up. So if a shopping cart with $500 worth of stuff in it now only costs $200, guess what? You're doing really good.
If you have money.
If you have cash.
So that means interest rates are going to head down too, right?
Yeah, eventually they're going to head down, but the long end of the interest rates will probably go up because fear of defaults will take over in the bond market, and that's going to drive up interest rates. And if the government can't get other countries to buy our debt, then the government's going to be in competition with the interest rates.
Right. All right, Russell. Well, hey, just tell us, where do we find you? How do we connect with you on the web?
Yes, GrantonFG.com, and reach out into us. You can log in and request an appointment, a conference with me. I'll talk one-on-one with anybody and help them get them into silver, and I don't charge for doing that service.
All right. Hey, you're doing God's work. Appreciate it, Russell. Hey, if you got a question for Russell, myself, KL@KerryLutz.com will get you a quick answer. Make sure you go over to the site, financialsurvivalnetwork.com. Check the show notes of this interview. Click through. You get right through to Russell, and you can connect with him there. Russell, appreciate you coming on. We'll talk to you again soon.
Always a pleasure, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.